Hey guys, how are we all doing? Welcome back to another episode of the Crypto Dojo free training series. We are putting this out just as a bit of a public service to everybody that is in the free section of the Discord, just to help all of you guys on your journey to become profitable traders and investors in the cryptocurrency market. So we wanted to do this, and especially this episode, I think it's very important because it's all based around the 4 year cycle that Bitcoin follows. And it's all based around the halving, right? I think it's probably one of the most important things you absolutely have to have baseline knowledge in. And I'm finding more and more newer people have come into the market. Maybe it was like late 2020, 2021, or something like that, or even new people coming to the market this year, and they basically have zero understanding of how the market cycles work, zero understanding of how the 4 year cycle works, or even how the traditional finance market works, and how our 4 year cycle has actually been interacting with the Federal Reserve, which is what most people probably don't understand, especially those that are too integrated in the cryptocurrency markets and not really interlinked with the macro state and monetary policy, and how that has actually played its own role in the Bitcoin market cycles. We're going to talk about that. So I'm going to overlay for you guys the Federal Reserve balance sheet over the top of the 4 year market cycle chart. But first, we have to talk about what is the halving and what are market cycles, right? So first off, we're just going to have a quick look at market cycles, right? And the easiest way to read where we are in the market cycle is through the emotions of the group. What does the group think, basically feeling, right? And you can sort of get a feeling for this by tapping into the conversations people are having on Facebook and Twitter. And if you're seeing people talking about crypto on Instagram, then it's probably, getting towards peak financial risk area, because it's probably the last place people go to start talking about crypto, and only when they're up, right? But I think, Discords, Instagrams, Twitter, and stuff like that, Facebook, I should say, sorry, not Instagram, as a good idea, a good place to sort of get a feel, right? And basically, what happens is when people are really excited and they're all talking about how much money they made and telling all their friends, usually that's a point in the market cycle where at the point of maximum financial risk. And when people aren't talking about it at all, and there's not much interaction in any of the groups, and nobody's watching my videos and all that sort of stuff, generally we're at this point of maximum financial opportunity. And that's because when people are excited, they tell everybody about things, they sort of radiate energy, and that makes you want to talk, right? Because your dopamine's pumping. And when you're depressed and you haven't made much money in a long time and things haven't been going too well for you, you don't really want to talk to people. So you don't talk about it. So it's important to understand your own emotional state, and then also get an understanding of the group's emotional state, and you sort of feel where the market is at, right? And so what we want to be doing is we want to be recognizing when we're at this point in the market, maximum financial risk, when everybody's talking about the market's been pumping, and we want to be able to identify when we're at the point of maximum financial opportunity as well, right? And typically it actually looks a lot more like this, but we'll go into that a little bit later, right? Okay, so the Bitcoin halving, right? Typical economic market cycle in TradFi goes for about 8 to 10 years, and basically what we see, I'll give you an example, right? So 2000, we had a dot-com bubble, right? Then 8 years later, we had the global financial crisis. And then we probably were on track for about a 10-year cycle, because they were actually trying to start raising interest rates in 2018. But Trump sort of nipped that in the butt and forced the Federal Reserve to drop rates, right? And basically sort of pushed back the end of the market cycle. And then we had COVID anyway, and they had to stimulate massively when it should have been more towards the end of the cycle. So it's pushed it out a few extra years. And in my opinion, we actually had the recession, and the end of the cycle was actually in 2022. And so we just had a 14-year cycle from 2008 to 2022, right? So generally, it goes from about 8 years to 10 years. Now, the Bitcoin economy works a little bit differently, because we have something called the halving, right? Now, the halving is basically a way for the Bitcoin blockchain miners, the people who the companies and people who have the computers that run the algorithm, the blockchain, basically for transacting, for processing transactions, they get rewarded every 10 minutes with a certain amount of Bitcoin. Now, every 4 years, that actually gets cut in half. And because when that gets cut in half, what happens is the miners, they all of a sudden have half the amount of Bitcoin to sell onto the market. Now, the miners are the biggest controllers of price in our market. It's very important to understand that. And it'll make the whole cycle and the way that everything moves make a lot more sense, right? So before the halving, they sell extra Bitcoin because they have to stock up on cash so that they can continue their operations after the halving without selling any of their Bitcoin. So think about it like this. If you're running a business or, maybe you work for a company, think about all of a sudden tomorrow, like that, overnight, all of the company's costs doubled in price, right? That is what happens to Bitcoin miners, and the date is going to be, we're going to go to this website here, Bitcoin Block Half, and the date for the next halving is going to be in 282 days, and it's going to be on the 26th of April, 2024, right? And the reward, it's called the block reward, is going to drop from 6.25 Bitcoins distributed every 10 minutes to the network. It's a random distribution. So sort of like a little bit of a lottery, but they all pull together and it sort of evens out over time. 6.25 coins per block, right? And that will decrease to 3.125 coins per block. So what that means is the cost of production to generate one Bitcoin is actually going to increase by double, right? So at the moment, JP Morgan put out a press release recently, and basically they said that the cost of production is about $20,000 to $25,000, and that will increase to over $40,000 to $45,000 post-halving. At the moment, the price of Bitcoin on the 18th of July, 2023 is currently $30,000 for reference. So that means post-halving, the cost of price will push up to the cost of production. Now, Satoshi Nakamoto, the inventor of Bitcoin, he wrote in the white paper that the price of an asset or commodity will naturally gravitate to the cost of production. So he pre-programmed in the halving to go across Bitcoin's life cycle so that it would drag the price up slowly every 4 years. And he did this to counteract the inflation that is caused by the printing of currency nonstop by the Federal Reserve, the Bank of England, and the ECB, and all the other central banks all around the world, right? And that is why Satoshi Nakamoto scribed into the Genesis block when he created Bitcoin. So Genesis block is the first transaction, the first Bitcoin that was printed, that the headline from the Times, the paper that morning in the UK, that basically the title said, the chancellor's on the second bailout for banks. So he actually created Bitcoin in a protest against the bank bailouts because he knew that the inflation from printing and debasing the currency all around the world was a hidden tax on the people and the population of the world. And he wanted to create something and put it out there that could be a digital asset class that could actually fight against the eroding and debasement of our currency and purchasing power. And so the Bitcoin blockchain is programmed to increase in value over time based on the halving cycle, which will drag the cost of production up and in turn drag up the price of Bitcoin over time, right? Now, that's not the only thing. There's a whole heap of other things happening at the same time, and there are a fair few market dynamics. So we're going to get into a little bit of economics here. So try and think of it as if we're, a good analogy I like to use is the gold mining company, right? So imagine you have a gold mining company. Right, so here on our graph, we have the Q axis, right, which is the quantity, right? So quantity of gold down here, and then we have price, the price of gold up here. And basically, imagine that we have found an equilibrium in the market where demand has met supply, right? And that's at $1,700. Now, all of a sudden, the gold company cannot produce the same amount of gold anymore. Overnight, bang, they get the amount of supply they can pull out of the ground gets cut in half. And it's not just them, it's every single gold company around the entire planet. All of a sudden, the amount of gold they can pull out of the ground and mine gets cut in half. What do you think is going to happen to the price of gold, right? It's going to increase because when you reduce supply, demand is actually reduced as well, and there's less people that will be willing to purchase it at a higher price. So less of transactions will take place because there's less supply into the market, but those transactions will take place at a higher price because there's more scarcity of that asset or that commodity in the marketplace, right? Now, the thing that's weird about Bitcoin is, and it's why it's different to every other asset class on the planet, is usually when, you have other market dynamics going on like this and you have supply decreasing, what happens is demand will also decrease as the price of that asset goes higher because there's less people willing to purchase, the same thing at a higher price, right? So you lose those marginal buyers, right? But the thing with Bitcoin is when the price of Bitcoin goes up, it actually increases in the amount of people that want to buy it. It actually increases demand and you get more marginal buyers the higher that it goes. Nobody wanted to buy Bitcoin under 20K. No one wanted to buy it at 15,800, right? Only a few big players did, and then they pushed it up. Now at 30,000, there's more people that want to buy it. And I can guarantee you at 40,000 and 50,000, there's going to be even more people that want to buy it, right? It does help that Bitcoin is divisible, right? So we can buy part of a Bitcoin or Satoshis, right? So more people can get into the market that way, right? So what we need to think about, and this is why I say there's a strange phenomenon which creates part of the market cycle, the blow-off phase of the market cycle that we have after the halving, right? Because think about the start of the market cycle, right? We're in accumulation phase and we break out, we go into reaccumulation phase, and then we move into the halving. So the halving happens, right? Which is 280 days away from now, right? And then we have that supply gets decreased, okay? And then what happens is the miners stop selling. They have less supply, but they don't just stop selling. They don't just drop to 50%, continue to sell that. They actually stop selling altogether because they don't want to sell Bitcoin at a loss at all. They've been selling extra Bitcoin leading into the halving, which is actually going to suppress price leading into the halving because they're dumping all their reserves. And then they hold the reserves post-halving. So there's even less than 50% of supply. So there's a bigger supply shock than 50% cut that is programmed in. And that's just around the market dynamics of their business model because they need to pay for electricity and power and people to work on the miners and do repairs and stuff like that. And, for the cooling costs and all that sort of stuff, the land tax for the land that they're on or rent for the warehouses that they're in, whatever it is, the cost of production, they have to still fund that. So they sell before the halving happens. They stop selling Bitcoin and they live off the pile of cash that they've built up and they burn through that. And they wait until the cost of production, until price reaches cost of production, which JP Morgan has already said is going to be over $40,000 to $45,000, right? So when we start pushing up to $40,000, $45,000, what happens is people start to make more money. They start to tell their friends about it and people start to get excited. And what we were talking about back here, this stage of the market cycle starts to happen, right? I actually like this chart a little bit better. We go from that sort of hope to optimism to belief, and more people start talking about, Bitcoin's going on another run. Maybe some altcoins start popping off. People start getting excited about it and telling all their friends. And what that actually does is actually brings in more demand into the industry, into the market as well. And what happens is we find a new rebasement of the equilibrium at a higher level, and we have more quantity transacting now at a higher price. Right. So we're having a demand shock at the same time as a supply shock. Now, this cycle is going to be even more interesting because we have the BlackRock Spot ETF, and I'm going to show you a chart of gold in a little bit and what the gold ETF, the gold spot ETF, spot is really important, by the way. I'll explain that later. But we have the spot Bitcoin ETF actually coming out later on this year or early next year. It has to still be approved, but I'm pretty sure they're going to get this one along across the line. Could be wrong, but eventually it's going to get approved anyway, right? If it does get approved, we could have the timing of the halving match up very closely with the timing of the spot ETF approval, which could in turn lead to an absolutely insane bull market that we've never seen before. And I'll map that out for you in a little bit. But we could have a crazy supply shock with the halving, right? And the miners stop selling in line with the biggest demand shock that we've ever seen for Bitcoin in the history of the asset class, okay? Now, this is what, you know, your typical 4-year cycle chart looks like, right? So we start off in the accumulation phase, right down here. We'll start off in 2015, right? We have the accumulation phase and we break out of that accumulation. If you want to learn more about week-off accumulation, go and study our free course. You can go to cryptodojo.trade and sign up for our free course. It's in the Discord, and there is actually a full hour and a half on week-off accumulation, reaccumulation, distribution, and I explain all this, how it works, right? So we accumulate. Takes about a year usually, break out, run into reaccumulation, break out of that. Then we have the halving. Then from the halving, we move into a bull market, which usually lasts about a year to a year and a half, right? About a year and a half, a little bit longer sometimes. Like the last two have been around 500 to about 520 to 550 days, okay? I'll map that out for you on a little bit more and it'll make a little bit more sense. Don't worry. Right. And then after that run, about 550 days, then we're going to a bear market. The last three bear markets pretty much been exactly 1 year. The last two were exactly 1 year. The one previous was a little bit longer. Okay. And then it goes and it starts the cycle over again. Right. And we go accumulation, reaccumulation, halving, bull market. And so we're probably following that same pattern again, except that this one could be a little bit different. And we might break out the top of this bell curve. Who knows? If the spot ETF does get approved, which in my opinion, most likely will. Okay. Now let's go and have a look at this chart live. And one thing that not many people really actually talk about is this blue line that I have over the top of the screen. Now you might be asking, what the hell is that? Now, some people might know what this is just by looking at the shape. And if you guessed the Federal Reserve balance sheet, you would be correct, right? Now, this is a really good indication of liquidity that is being injected into the economy. And we can see how this actually flows with our bull markets over the cycles, right? And I think especially important, right, we can see here quantitative easing started again in 2012, right? We had a big run out of the bottom of the market. Basically, President Obama came out and gave billions of dollars to the banks. They were on like that. London, Chancellor, second bailout of banks, Satoshi's famous line. And basically what happened is, they cut it off a little bit and then they restarted in 2010 and started pushing a little bit higher, cut it off and it went sideways for a little bit again. And then they started to inject more QE, more liquidity. And during that phase post halving, we can see that an injection of liquidity went very well, nicely along with when the market cycle for the bull market started post halving. Okay. Right, then we were flat for a long time, actually, maybe, what is this, 5 years, right? 1,200 days from 2014 to almost 2018, right? So about 4 years. It was pretty flat. And then they announced the market was getting a little bit too hot and they were actually going to bring it back, and they were planning on pulling this all the way back down to around, between $2 to $0 trillion, right? And basically, when they came out and announced that, they were going to start to do more QE, which is taking money out of the economy, which deflates all assets. we put the top in, and that actually happened. A lot of people think that, this happened because CME came out, because it was around the same time the CME market was actually released. But I actually believe that it wasn't the CME market that put the top. The CME exchange release or being launched that put the market cycle top in. I actually believe it had a lot more to do with quantitative easing being released, which happened the same week that the market cycle topped, right? And the same thing happened at the top in our last cycle as well. To the day is when we topped on the CPI date. Basically, Jerome Powell came out and said inflation is at 6.1%, and we're going to have to go from QE, which had been very, very rampant from COVID. You can see that massive increase of liquidity from 4.1 trillion all the way up to 7.19 trillion in a very short amount of time. And then it went all the way up to pretty much 9 trillion at the top, right? So we've more than doubled the balance sheet in basically 2 years. Okay, so that's a massive, massive injection of capital into the market. And basically from there, they announced they're going to do QT, which is taking money out of the market. And what happens? We've rolled over pretty much to the date, right? And then 1 year later, when CPI basically had started to drop past significant levels after a full year of tightening, we bottomed, right? So it is very important to understand the macroeconomic cycles and what's going on underneath the hood of the economy, because this actually flows in with the stock market very nicely as well. Okay, and then as they released, the information came out that they were going to start to move back to QT in about 6 months' time. And what happens? The market front runs that. We go back below the previous range high, and this is a clear distribution pattern. Break below the previous range low, come back up, try to resave this range, reclaim this range low, get rejected, and it's pretty much over and just downtrend for the next year and a bit, right? This date here, Thursday, the 13th of October, was the date of the CPI numbers coming out and getting released, right? Just quickly looking here, hopefully that all makes sense with accumulation, reaccumulation, bull market, bear market, and the flow that it goes through and the impact that the halving actually has, right? And then it's important to understand the impact that also the quantitative tightening has on the market and how that is actually also put in the top of the market cycles. Now, I don't know if it's just coincidence or if this has been purposely done by some powers, some large powers, market forces. But if we go from the very bottom back here in January 15, the market cycle to the top is exactly 35 months, right? And if we do the same on the next market cycle from the bottom to the top, it's exactly 35 months. Now, if we go from the bottom to the bottom, it's exactly 47 months, okay? Both cycles. So I'm not sure if that was done deliberately or if it just timed up really well with what the Federal Reserve was doing, but we can probably expect that this next market cycle, if it continues to follow the previous rhythm that we've been in for the history of Bitcoin, we could end up, doing something similar this cycle, right? So if it runs for 35 months, that's going to put us a market cycle top around November 2025. And then a full year later, October 2026 will where we'd be looking for the accumulation period to start. Okay, so hopefully that gives you a little bit of a map. You can go out, play with this, set up your own halving chart, chuck it up in the Discord chat and share it with everybody, get feedback if you want to. But in my opinion, this is pretty accurate, it's been very accurate. And it was also one of the things that helped me sell the top back in November in 2021, okay? Which was a very difficult top to sell for most people. But if you knew and understand what was going on with the Federal Reserve, if you knew that it had a big influence on the top in 2017, and just a general understanding, when they switch to QT, they're sucking money out of the market. So how are assets going to go up in price, right? There's less money. People can't buy as many things. Money going out of the economy, money going out of the markets. Assets are going to drop. stocks and cryptocurrencies, right? They are always going to be front running everything that's happening in the economy by about 6 months. So Jerome Powell came out and he basically said in June, we're going to start to do quantitative easing and take capital out of the markets. And what happened? Pretty much to the day, the market topped and we started pulling back quite aggressively, right? And that was back here. Okay. And then we were in a downtrend for a full year. Then we went into our accumulation phase, a full year after that, after we had a good reading on CPI. Okay. When it was showing significant drop in inflation. Now, inflation is sort of coming down and coming to a head. If we get up trueflation, right, and it's around 2.25. So, that is starting to get quite low. Services and housing are the last two sectors to come back down. And then, once that's pulled back, then we'll start to go back into our loosening phase, right? Our quantitative easing phase, they call it. And basically what will happen is this will give a boost to most assets. Now, if unemployment stays low, then what's most likely going to happen is we will end up getting our soft landing, right? Very important if you're watching this live in current time. At the moment, we're going through stock market earnings at the moment. If we have good earnings, Tesla's up this week, and then there's a few other big ones, IBM as well. Another one I'm really interested in watching is PayPal. If a lot of those tech stocks, if they come in with pretty good earnings, it's probably a good sign that we're more likely to end up getting a soft landing, right? And keep watching earnings, because a big thing is that to get the soft landing, we're going to have earnings start to improve over the next 6 months. If earnings start to fall off, okay, we're probably going to have a recession, right? If earnings continue to improve, which I am slightly expecting, and some other people who are a little bit more bullish on the stock market are expecting, then we can expect the soft landing to take place as long as unemployment stays low as well. So at the moment, unemployment is low, and basically we're looking for earnings to stay reasonable, right? And then start to pick up and be a little bit more positive towards the back end of the year. And then that will pretty much put us in a clear path for the Fed to start lowering rates in 2024. And then also start to add a little bit of stimulus to the market as well, which we will see pop up on this blue line over the cycle, okay? So when you can see here that when the banking crisis happened, which was back in March, we had an injection of capital, and the full year of withdrawing currency from the markets almost was at least half of it, to 60% of that was given back in one weekend, and we put an extra, I think, almost $600 billion or something back into the market. And look at what happened to the price of Bitcoin. The price of Bitcoin went from pretty much 20,000 up to 30,000 just from this one push of injected capital. Now, the market needs capital constantly injected into it. Just look at what already happened to the banks, right? And I believe that once inflation is down finally and things are getting under control, next year, they'll start to lower rates, and then this will start to creep up slowly again to stimulate the market. And we'll probably end up in a slight curve like this, or flat line for a little while, but I would not expect this to continue to pull back for some time. They might have to wait until post 2025 or 2026 to start withdrawing that capital again. But this will be one line. The Federal Reserve balance sheet will be one line to keep your eye on. Now, if you want to get that up, it's WALCL, and you can just click on that and put it over. And you want to do new price scale. So it pops up over here. Because the Federal Reserve is blue, I like to make them blue because orange is the color of Bitcoin. All right. Hopefully that makes sense. Now, in terms of price, because everybody is always going to ask me, I am looking at a potential, anywhere from 120 to 250 for the market cycle top. It is very hard to pick price wise. I'm more about, seeing where we are at in the market cycle time wise. I think that's a lot easier to actually predict the timing cycle than what it is for the price cycle. So, we'll be looking for somewhere around the 200K mark to 250K area. around that end November 2025 to be the top of the market. Okay, but it is very difficult to pick the price. It's a complete guess. Don't take that as financial advice or anything like that. I'll get angry if we don't get close to it or if we go way above it, because with the spot ETF, anything could happen. Now, I want to show you the gold price here. Right, GLD. This is GLD when it was launched. The GLD is a gold. It was the first gold spot ETF. Now, there's a big difference between spot ETFs and futures ETFs. At the moment, we have futures ETFs, but they're no good because you have to constantly roll over the contract from the current contract to the next forward contract, right? And every time you do that, you lose a chunk of percentage. Sometimes it's 2%, sometimes it's 1%, sometimes it's 4%, and it builds up every contract over time. You have to do that every quarter or every month for some of them, right? And basically that ends up decaying the price over time. Now, because you're only holding a paper contract, you're not holding the underlying asset of the ETF, right? So with the underlying asset, you don't have that decay. So what happens is it actually generates a lot more interest. People buy it and they hold it for a lot more time, get a lot of bigger investors. And this is going to actually cause huge flows from pension funds and all the institutions, sovereign wealth funds, and everybody is going to want to start to take a piece of the pie once that happens. And BlackRock knows this, and there's billions of dollars in it just for managing the ETF, which is why they want to get it off the ground, right? And we can see, if we scroll back here and look at the price of gold over the last 10, 20 years before the ETF, right? Had a little bit of a cycle in the 80s, yes, a bit of a run, but generally, it was hanging around that $300 mark for almost 20 years, right? Then a little bit of a move up into the GLD launch around $400, right? From, the lows of like 280. So a little bit of a move. But then you can see the explosiveness in the price of gold, right? Very quickly ran to $700, right? Then very, very quickly ran to $1,000, then very quickly ran to $2,000 over the next 6 years, right? So anything can happen with the BlackRock spot ETF. I'm not going to sit back here and say I know exactly what's going to happen or going to be able to predict it. But basically what we are looking at here is a strong market cycle that is continuing to follow the rhythm of the market that has been in place since the beginning of time in Bitcoin. And the 4-year market cycle is staying strong. So post-halving, I expect a bull market to run for around 550 days and so it'll be 35 months to the top and 47 months to the bottom, around that, give or take a couple of months either side, anywhere. I'll be happy with anywhere from 44 to 50 months for the full cycle to the next bottom, and to the top anywhere from 32 to 40, right? I think would be pretty close. Right, so we're just looking at that timing cycle, and when things start to get bearish, and the way I picked the top back here is things started to get really bearish, especially on the weekly time frame here, after they announced QE. They announced QE was going to transfer into QT, right? And we had a massive SFP of the previous range high. We had bearish divergences, really big divergences too here. Like, look at this, right? Obviously, there's not as much strength there. And we had a fake out of the range high. Plus, I knew that we were getting to the back end of the cycle, because back here, right, the cycle had gone for 525 days, and we were already in a longer time frame, right? We'd already been around 540 days, and we were also getting in seasonality to the back end of the year. Now, usually the start of the year isn't very strong. It's usually fairly bearish, right? And so we're in the back end of the year, not looking very good, putting in bearish price action here. Like, look at this weekly, right? That is a nasty, very strongly bearish weekly candle. It's if you've seen some of my other content, I talk about this. I actually put about a big thread on Twitter about this. You can go back and look for it if you want to. Shooting star reversals and morning star reversals on the weekly, and how they can often put major turning points in the cycle, especially if the third candle closes below the first candle, right? So it's a 3 candle reversal pattern, right? And we can see there's one here and there's one here. This one doesn't get the engulfing close, but is still pretty nice in its shape. And, you know, all three led to major reversals to the downside. And if you scroll back as well, you can see pretty much every single time there is a major reversal in price, you get an engulfing or a engulfing morning star on the weekly time frame, right? The upside and the downside. So, you know, we had a whole heap of things giving off bad warning signals, and I put up posts and I put up a couple of videos about it. And warned everybody that could potentially be the top. And it was, you know, everything coming together, understanding what was going on with the Fed meeting, moving to QT and tightening cycle and inflation being too high. And, you know, knowing that that would move us into a bear market in traditional markets and that would drag cryptocurrency markets down. And then also understanding the 4-year cycle and understanding that we were late in the bull market and the time of year as well, that, you know, it was going to take too long if this was going to have a dip down and then come back up. You know, we'd be in the middle of the year and we'd be pushing into 600 days into that cycle, and it was just getting too long. So, you know, I thought most likely it's time to start taking profit. I sold all of my altcoins when price of Bitcoin was above, I think, 67K or something like that. It was right at the Pico top, and then managed to get out of a lot of my BTC around 65 down to 55 area. If I didn't sell it all up here, I sold in the rest of this move down through the 50s, right? And then, yeah, I started to buy back in through here and massively increase the amount of Bitcoin that I was holding by about 3 times almost, right? Unfortunately, I got caught up pretty badly in the FTX scandal. So I was forced to sell the bottom here, and hopefully I won't have to rebuy when I finally get those bags back too much higher. So I'm praying that Bitcoin doesn't end up at 50K or higher by the time we get those FTX bags back by the end of the year, but we'll see how we go. But nonetheless, I'm very happy and proud of the way that I traded this cycle, and that a lot of that comes down to understanding where I was in the market cycle, and understanding, you know, where to be accumulating and where to be distributing. And the same thing applies for altcoins. Okay, guys. So let's go and have a look at a couple of altcoins here, because I know a lot of people like to trade alts. Ethereum going through its accumulation phase back here, right? And then it broke out. Bitcoin went through its reaccumulation phase through here. But realistically, Ethereum and a lot of altcoins, they just have a massive accumulation phase. While Bitcoin is going through its accumulation and reaccumulation, right? All through this area here, altcoins are just going sideways pretty much at a much lower area. So basically altcoins just get trapped down here until they finally break out. And it's usually post-halving, right? And we can see that in action on Ethereum in the last cycle. I'll show you another example here in ADA. ADA basically exactly the same as Ethereum, right? It broke out, I think, a little bit. Where was the halving? I think actually the halving was around here somewhere. So basically around the time of the halving, I think it might have been in June. Yeah. So around the time of the halving, it ended up breaking out, flipping the range high, and then went on and pumped ridiculously hard, right? Insane pumps on ADA for its second cycle as well. You don't usually see that. And sometimes they don't actually go higher than the previous market cycle. But let's go and have a look at a few at the moment. Right, so let's go and have a look at Aave here. Clear accumulation. Now, this just looks the same as Ethereum did back here, does it not? It's the same thing, guys, and it's just going to continue to stay most likely inside of this channel for a little while. Then post-halving, post-April 2024, right? We'll have a breakout, same as what we just saw before on ADA, and then it will go on for its next market cycle and probably pump pretty hard, right? Because it's a great project. Link is the same, right? And so what I like to do with these, while Bitcoin is in an accumulation phase, I like to look to try and add to my altcoin positions. I'm going to be looking to distribute those post halving bull market, and sell these while they're pumping up through the bull market. I don't want to hold on to my alts for too long. I want to cycle through alts because they move a lot faster, and you can have alts that top out at the start of a market cycle, and then you can have alts that wait until the end of the market cycle to run. So you don't want to be just like all alts are the same, because they actually have their market cycles at different times, and it usually goes with the different narratives that are going on. So it's important to understand the different narratives that are happening at that time, and be rotating through them. It is hard to trade altcoins perfectly, so don't try and be perfect with altcoins, because we just want to be accumulating them when they're in accumulation ranges, and then as they're breaking out of those accumulation ranges, right, we want to be starting to take profit of them as they go higher, and leave a few runners, and then rotate into the next coins that are still in accumulation or still look like they have a lot more upside, or just move back into Bitcoin and hold that until we get to the back end of the bull market cycle, right, which we're looking to be sometime around November 2025. Now, probably the biggest trade that you want to be looking for is the rotation from BTC to Ethereum. This is one of the ones that has made me the most money in any single trade over the years. In just one account, right, I doubled the amount of Bitcoin that I had. I was holding just in a little altcoin trading account that I had. I was trading only off my phone on the side for this account and never logged into it on my computer. And I had about 4 Bitcoin in it. When I saw Ethereum rallying here, and I was like, okay, this looks like Ethereum is about to pump and finally get its move against BTC. And basically I rotated the entire account holdings, because I was just trading in and out of altcoins into Bitcoin. And I traded the whole account across from BTC to Ethereum. And in 1 month, I pretty much doubled the amount of Bitcoin from 4 BTC to 8 BTC, literally in one trade, and then rotated back to BTC. And then Bitcoin doubled in price after that as well. So, massive, massive gains through that rotation, just from understanding, a simple little rotation cycle that Ethereum was going to make its move against BTC. So that is probably one of the main ones that you want to try and catch. And we could have one of those coming up soon, potentially. If this breaks out of this falling wedge, I will be moving a lot of my margin, because it holds a lot of my margin in BTC, to trade with, using that trading capital in BTC, rotate that across to Ethereum and hold in Ethereum, waiting for that to play out, right? Don't do it with all of my capital, because it is risky, but I will do it with maybe 1 or 2 of my side accounts, and then maybe a chunk of my main account as well. But always I want to be staying diversified, because sometimes Bitcoin just wants to rip anyway and leaves Ethereum in the dust. But when it's obvious that Ethereum is going to make a move, I want to be riding that, because you can get a nice outsized move and really increase the bags that you're holding, your BTC allocation. Okay. So those are the main things that I wanted to discuss. If you want to learn more about accumulation, and the entry points to get in on these accumulation ranges, what I showed you with ADA, for example, and the Ethereum range, if you guys want to know more about that, there is a full section in our free course in the Discord, right, which basically maps out Wyckoff accumulation and shows all the different areas that you want to get into trades in this accumulation phase of the market, which I think would be very helpful. If you don't understand it, I think is absolutely essential to being a profitable trader. And because there's the other side of it as well. There's the accumulation side of it, and then there's also the distribution side of it as well, which I think is quite important to know and understand. So jump into our Discord if you're not in there, cryptodojo.trade. You can go in there and sign up for the free course, and all the info is in there. That's pretty much it, guys, for today. Thanks a lot for tuning in. Hopefully you got something out of it. If you did, please give this post a like or a share. And yeah, share it with your friends that are getting into the crypto industry. Thanks a lot for tuning in, and we'll see you all in the next episode.